Hello everyone, welcome back to my YouTube channel. Today we are discussing the latest developments surrounding the Vietnamese dong and the Iraqi dinar, two currencies that continue to attract strong attention from global investors, currency watchers, speculative traders, and people following international economic reforms. Over the last several weeks, there has been renewed discussion across financial communities regarding exchange rate movements, central bank policies, oil market developments, foreign investment, trade partnerships, and growing rumors about possible currency adjustments in both Vietnam and Iraq. In today's report, we are taking a detailed look at what is actually happening in the markets, what official institutions are saying, and why many analysts believe the coming months could become extremely important for both the Vietnamese dong and the Iraqi dinar. The global currency market remains under pressure as the United States dollar continues to dominate international trade and reserve systems. However, several emerging economies are now trying to strengthen their domestic currencies through reforms, economic expansion, trade diversification, and stronger foreign reserves. Vietnam and Iraq are two countries frequently discussed in this category, because both nations are experiencing economic transitions that could shape future currency stability and valuation trends. While there is still no official confirmation of any sudden revaluation event from either country, financial observers are carefully watching every move made by the State Bank of Vietnam and the Central Bank of Iraq. Vietnam's economy has continued showing resilience despite global inflation concerns, supply chain disruptions, and geopolitical uncertainty affecting world markets. Over the past year, Vietnam has positioned itself as one of Asia's fastest-growing manufacturing hubs. International companies from the technology, electronics, textile, automotive, and semiconductor sectors have expanded operations inside Vietnam, creating strong demand for exports and increasing foreign direct investment inflows. Many economic analysts believe that this growing industrial power is helping stabilize the Vietnamese dong, even as global currencies experience volatility. One major factor supporting the Vietnamese dong is Vietnam's expanding trade relationship with the United States and several European and Asian partners. Vietnam has become a strategic manufacturing alternative for many multinational corporations seeking to diversify production away from other regions. This has increased export revenues significantly, especially in electronics, machinery, clothing, and agricultural products. Strong exports generally improve foreign reserve positions, which can help stabilize national currencies over time. Financial experts say the Vietnamese government has remained careful with monetary policy. Instead of allowing rapid and uncontrolled appreciation of the dong, officials appear focused on maintaining controlled stability to protect exports and investor confidence. A sudden large increase in currency value could negatively affect Vietnam's export competitiveness, which remains one of the country's strongest economic drivers. Because of this, many professional economists argue that expectations of an overnight massive revaluation may not align with Vietnam's long-term economic strategy. Still, speculation continues growing online regarding the future value of the Vietnamese dong. Currency forums, investment channels, and social media groups frequently discuss the possibility of gradual appreciation tied to Vietnam's rising economic status. Some investors believe that if Vietnam continues attracting international manufacturing and technology investments at the current pace, the dong could strengthen slowly against weaker regional currencies over time. However, analysts repeatedly warn that there is no official evidence supporting rumors of an extreme overnight exchange rate reset. At the same time, Iraq's currency situation continues attracting global attention due to the country's oil revenues, banking reforms, and ongoing discussions about modernization of the financial system. The Iraqi dinar has long been one of the most discussed speculative currencies in the world, especially among retail investors hoping for a future increase in value tied to Iraq's economic recovery and energy wealth. Oil prices remain one of the biggest factors influencing Iraq's financial position. Iraq depends heavily on crude oil exports to generate government revenue and maintain foreign reserves. Recent stability in global energy markets has improved Iraq's fiscal outlook compared to previous years, when falling oil prices created severe budget pressure. Higher energy revenues have allowed Iraq to strengthen public spending, infrastructure development, and reserve management, all of which are important for currency confidence. The Central Bank of Iraq has also continued implementing reforms designed to modernize banking operations, improve compliance with international financial standards, and reduce illegal currency speculation. Officials have repeatedly emphasized the importance of protecting the Iraqi financial system from corruption, money laundering, and unauthorized dollar transactions. These reforms are seen by some analysts as positive long-term indicators for overall monetary stability. In recent months, Iraqi authorities have also increased discussions regarding digital banking systems, electronic payment expansion, and improved transparency within the financial sector. Several international organizations have praised Iraq for taking gradual steps toward modernizing financial institutions. Supporters of the Iraqi economy argue that these developments could eventually create stronger confidence in the Iraqi dinar over the long term. Despite this optimism, many economists caution investors against unrealistic expectations surrounding immediate revaluation rumors. Historically, claims about sudden massive Iraqi dinar value increases have circulated online for many years without official confirmation. Financial professionals stress that meaningful currency appreciation usually requires broad economic diversification, political stability, productive industrial growth, stable monetary reserves, controlled inflation, and international market confidence. While Iraq has made progress in certain areas, challenges still remain. Political uncertainty continues affecting Iraq's economic environment. Government negotiations, regional tensions, and policy disagreements sometimes create instability that impacts investor confidence. International businesses typically seek predictable regulatory conditions before committing major long-term investments. For Iraq to achieve sustainable economic transformation, analysts say consistent governance and long-term reform implementation will remain essential. Meanwhile, supporters of the Iraqi dinar point toward Iraq's enormous oil reserves as a major reason for long-term optimism. Iraq possesses some of the world's largest proven crude oil reserves, and energy exports remain the backbone of the national economy. If Iraq successfully expands refinery infrastructure, increases energy production efficiency, and diversifies into non-oil sectors such as manufacturing, transportation, tourism, and agriculture, the country could strengthen its economic position significantly over the next decade. The international currency market has also been reacting to ongoing discussions about de-dollarization among several global economies. Countries across Asia, the Middle East, and parts of Africa have increasingly explored trade agreements using local currencies instead of relying entirely on the US dollar. While the dollar remains dominant globally, this trend has generated speculation about how emerging market currencies might evolve in the future. Some investors believe nations with growing export sectors and strong natural resources could benefit if regional trade increasingly shifts toward local currency settlements. Vietnam has particularly benefited from expanding international trade partnerships. Several major technology firms continue relocating supply chains and manufacturing operations into Vietnam, increasing employment and industrial output. Infrastructure development projects, port expansions, and transportation modernization efforts have also improved Vietnam's competitiveness in global commerce. Analysts say these developments strengthen long-term confidence in the country's economic outlook. Inflation management is another important factor affecting both currencies. Vietnam has generally maintained relatively controlled inflation compared to many emerging economies. helping protect purchasing power and maintain investor trust. Iraq, meanwhile, faces greater challenges due to dependency on oil revenues and external market fluctuations. Maintaining stable inflation levels remains critical for protecting currency stability and public confidence. Global investors are also paying close attention to foreign reserve levels held by central banks. Large foreign reserves provide governments with greater ability to stabilize currencies during periods of volatility. Vietnam's reserve position has improved steadily through strong export growth, while Iraq's reserves have fluctuated based largely on oil market performance. Strong reserves are often viewed as a key signal of monetary strength because they help central banks manage exchange rates and maintain financial stability during external shocks. Some market observers have speculated about possible future reforms involving currency redenominations or structural exchange rate adjustments in Iraq. However, experts clarify that redenomination does not automatically mean increased purchasing power or investor profit. In many countries, redenomination simply removes zeros from banknotes for accounting convenience without changing the underlying value of the currency. Economists continue urging the public to distinguish between technical monetary reforms and actual revaluation events. The Vietnamese dong has attracted increasing interest from Forex traders because of Vietnam's economic growth trajectory. International tourism recovery has also helped strengthen economic activity as visitor numbers rise across major Vietnamese cities and coastal destinations. Tourism generates valuable foreign currency income that contributes to broader economic stability. Combined with manufacturing growth and export expansion, these trends continue supporting Vietnam's economic momentum. Meanwhile, Iraq continues working to stabilize internal banking systems and improve international financial relationships. Recent discussions between Iraqi officials and international financial institutions have focused on compliance measures, banking transparency, and modernization initiatives. Such reforms may appear technical, but analysts say they are essential for building long-term confidence in Iraq's monetary system. Currency speculation remains highly active across social media platforms, especially concerning the Iraqi dinar. Viral claims often predict dramatic overnight changes in exchange rates, leading many inexperienced investors to misunderstand the realities of global monetary systems. Financial experts warn viewers to rely on official central bank announcements and credible economic analysis instead of unverified online rumors. Major currency reforms typically involve extensive preparation, regulatory coordination, and public communication rather than sudden secret events. At the same time, long-term investors continue monitoring both Vietnam and Iraq because each country possesses strategic economic advantages. Vietnam benefits from industrial growth, trade diversification, political consistency, and expanding international partnerships. Iraq benefits from vast energy resources, reconstruction potential, and strategic geographic importance in the Middle East. Whether these strengths eventually translate into stronger currencies depends on multiple interconnected factors, including governance, infrastructure, financial policy, and global market conditions. International banks and rating agencies have also noted Vietnam's increasing importance within Southeast Asia's economic landscape. Rising middle-class consumption, urbanization, and digital economy expansion are creating new growth opportunities. Technology manufacturing in particular has become a major engine of export performance. If these trends continue, Vietnam could further strengthen its regional economic influence over the coming years. In Iraq, reconstruction and infrastructure development remain major priorities. Roads, energy systems, housing projects, telecommunications networks, and transportation modernization efforts are essential for supporting long-term economic growth. Investors often view infrastructure improvement as a sign that a country is preparing for greater private sector expansion and international business engagement. The role of central banks remains crucial in both countries. The State Bank of Vietnam continues carefully managing monetary policy to balance growth, inflation control, and export competitiveness. The Central Bank of Iraq continues focusing on reserve protection, banking reforms, and exchange market stability. Both institutions understand that sudden, uncontrolled currency movements can create economic instability rather than prosperity. Analysts also note that currency value alone does not determine national economic strength. A country with a lower valued currency can still maintain strong exports, rapid industrial growth, and rising living standards. Japan, South Korea, and several other major economies historically managed export-driven growth without requiring excessively strong currencies. This is why economists caution against simplistic assumptions that higher nominal exchange rates automatically represent economic success. Nevertheless, investor interest in both the Vietnamese dong and Iraqi dinar remains strong because people are searching for opportunities in emerging markets. Global uncertainties surrounding inflation, interest rates, debt levels, and geopolitical tensions has encouraged many individuals to explore alternative investment narratives. Social media has amplified these discussions dramatically, creating communities dedicated entirely to following currency developments. Recent statements from financial authorities in both countries suggest continued commitment toward economic stability. Rather than dramatic short-term currency shocks, Vietnam appears focused on sustainable industrial expansion and export competitiveness. Iraq appears focused on banking modernization, oil revenue management, and gradual financial reform, while neither government has officially announced a major revaluation plan. Markets continue analyzing every policy adjustment closely. Some economists believe the future of the Vietnamese dong may depend heavily on Vietnam's ability to move beyond low-cost manufacturing into higher-value industries such as advanced technology, semiconductor production, artificial intelligence infrastructure, and digital services. If Vietnam successfully climbs the global value chain, the country could strengthen economic productivity significantly over the next decade. For Iraq, diversification beyond oil remains one of the most important long-term goals. Countries heavily dependent on a single export commodity often face greater economic volatility when global prices fluctuate. Expanding sectors such as agriculture, logistics, tourism, renewable energy, and domestic manufacturing could help Iraq create a more balanced and resilient economy. Another important issue affecting both currencies is global interest rate policy. Decisions made by the U.S. Federal Reserve influence capital flows worldwide. Higher U.S. interest rates often strengthen the dollar and create pressure on emerging market currencies. Conversely, when global investors seek growth opportunities outside developed markets, countries with strong economic fundamentals may attract additional investment inflows. Vietnam's relatively young workforce and expanding education sector are frequently highlighted as long-term advantages. International corporations often look for countries with skilled labor, competitive operating costs, and stable infrastructure. Vietnam's success in attracting major manufacturers has positioned it as one of Asia's rising economic powers. Iraq, meanwhile, continues facing challenges related to political coordination, infrastructure gaps, and regional security concerns. However, supporters argue that the country's resource wealth provides enormous long-term potential if reforms continue successfully. Some investors remain convinced that Iraq's economy could expand significantly in the future if stability improves and diversification efforts accelerate. Currency traders also monitor black market exchange rates and parallel market activity because such indicators can reveal public confidence levels. Iraqi authorities have spent considerable effort attempting to reduce gaps between official and unofficial exchange rates. Narrowing these differences is considered important for financial credibility and economic transparency. In Vietnam, authorities generally maintain tighter control over currency fluctuations helping reduce excessive volatility. Controlled exchange management has supported export industries while maintaining confidence among foreign investors operating in the country. Stability is often considered more valuable for long-term economic planning than unpredictable rapid appreciation. Market psychology also plays a major role in currency speculation. Rumors, headlines, geopolitical developments, and investor sentiment can all influence short-term trading activity, even without fundamental economic changes. This is why professional analysts encourage viewers to separate emotional speculation from factual economic reporting. Over the last several years, both Vietnam and Iraq have strengthened international partnerships with countries across Asia, Europe, and the Middle East. Trade agreements, investment deals, and infrastructure cooperation projects may contribute to future economic growth. International cooperation often increases investor confidence because it signals broader integration into global economic systems. Technology and digital finance are becoming increasingly important in modern monetary systems. Vietnam has rapidly expanded mobile payments, fintech innovation, and digital commerce. Iraq has also started pushing for greater electronic payment adoption to reduce dependence on cash transactions and improve transparency within the economy. These modernization efforts may gradually strengthen financial systems over time. Analysts say one of the biggest misunderstandings among retail currency speculators is the assumption that resource wealth alone automatically creates a stronger currency. In reality, currency strength depends on a wide combination of factors, including productivity, institutional credibility, trade balance, inflation control, fiscal policy, investor confidence, and political stability. Oil wealth can support an economy, but sustainable growth usually requires broader structural development. The coming months may prove important for both countries as global markets continue adjusting to inflation trends, energy price movements, geopolitical uncertainty, and changing trade dynamics. Investors will likely continue monitoring central bank announcements, foreign reserve data, export figures, and international investment flows for clues regarding future currency direction. Vietnam's manufacturing momentum remains one of the strongest stories in Asia right now. International firms continue expanding operations there because of competitive labor costs, improving infrastructure, and strategic geographic positioning. Many analysts believe Vietnam could become even more influential in global supply chains during the next decade. For Iraq, energy markets remain central to the national outlook. If oil revenues remain stable and reform programs continue advancing, the country could strengthen financial resilience gradually. However, experts caution that rebuilding institutional trust and attracting large-scale international investment will require sustained progress over many years. Currency revaluation discussions will likely continue dominating online conversations because they generate strong emotional interest among investors hoping for major financial gains. Yet professional economists consistently remind the public that real economic transformation is usually gradual rather than sudden. Sustainable currency appreciation often reflects years of industrial development, trade growth, fiscal management, and institutional reform. As of now, there has been no official announcement confirming any dramatic overnight revaluation of either the Vietnamese dong or the Iraqi dinar. However, both currencies remain closely watched because of the broader economic changes occurring within Vietnam and Iraq. Supporters of both economies argue that long-term reforms, infrastructure development, investment expansion, and strategic economic positioning could eventually strengthen financial systems over time. The international community will continue paying attention to Vietnam's export-driven growth model and Iraq's energy-backed recovery efforts. Investors, analysts, and policymakers alike understand that emerging market currencies can become increasingly important as global economic power gradually diversifies beyond traditional financial centers. For viewers following these stories closely, Experts recommend staying informed through credible financial news, official central bank statements, and verified economic reports, rather than relying solely on viral speculation. Currency markets are influenced by complex global forces, and understanding those forces requires patience, research, and careful analysis. As we move deeper into 2026, expectations surrounding the Vietnamese dong and Iraqi dinar are likely to remain among the most discussed topics in international currency speculation communities. Whether future developments bring gradual appreciation, policy reforms, or continued stability, one thing is certain. Both Vietnam and Iraq remain important countries to watch in the evolving global economic landscape. Thank you everyone for watching today's detailed report. Stay tuned for more updates on the Vietnamese dong, Iraqi dinar, global currency markets, international finance, and the latest economic developments shaping the future of emerging market economies around the world.